Good morning, this is Robert Kaars Sijpesteijn bringing you this morning's market update. Today's focus is strongly around the Bank of England, with the pound slipping back while UK equities are underperforming their continental European counterparts as attention turns toward the MPC, which is expected to announce looser monetary policy at midday. The Monetary Policy Committee looks set to cut interest rates by at least 25 basis points from their current record low of 0.5%. and could also restart its own quantitative easing stimulus package in an effort to limit the impact of the UK's vote to leave the European Union. The pound is down 0.3% at one spot 32.93 in the immediate aftermath of the Brexit vote. Sterling fell as low as one spot 27.98, but has mostly traded between one spot 31 and $1.33. Sterling is down 9.1% in 2016, making it the worst performer among major global currencies. Yesterday's fall in the Purchasing Managers' Index for the service sector, which indicated the UK could be facing a 0.4% contraction in the third quarter of the year, was interpreted as the final piece of news set to force the bank's hand, although a cut was already widely expected. The bits that really could move markets today come in the shape of the unknowns. The Bank of England will not only decide on interest rates, but it will also formally vote on what to do with its asset purchasing quantitative easing program, which could be extended, and whether to offer a new round of cheap loans for banks in some kind of funding for lending scheme. The latest forecasts of the health of the economy from staff at the Old Lady will also be published in one of the most eagerly anticipated inflation reports since the crisis. Before the EU referendum, Mark Carney warned a recession was possible if the UK voted to leave. Today we will find out whether the bank believes that will materialise. In Europe, the UK 100 closed down 12 points yesterday at 6,686, while the Germany 30 closed with a 51-point gain at 10,209. In the commodities sector, gold prices traded near their highest levels this year on Wednesday as investors sought havens on increasing concerns over global growth. Gold hit a high of $1,367 a troy ounce this week, just shy of its year high of $1,374.71, reached on July 11th, before falling back to $1,357.40 late on Wednesday. The precious metal is up 28% this year. Meanwhile, Brent crude picked up yesterday after oil inventories report came through higher than expected, pushing the price up $1.50 to close on $43.44 a barrel. In today's corporate news, profits slid 8% in tough second quarter at FTSE 100 gold miners Randgold. Pre-tax profits were down by 48% at insurers RSA, but up by 1/4 on an underlying basis after accounting for one-off disposals last year. Operating profit was up 13% at Aviva as it hiked its dividend by 10%, and Inmarsat reported a 7% fall in pre-tax profits for the first half of the year after quarterly earnings for the 3 months to the end of June jumped 38%. Today's economic data in focus at 9:10 in the Eurozone, retail PMI for July is released. At 12 o'clock in the UK, the Bank of England monetary policy decision and inflation report is released, while at 12:30, Mark Carney will follow up with a press conference, and at 3 o'clock in the US, factory orders for June are released. That's all for this morning's market update. Thank you, and goodbye.